Let's bring in another voice into the conversation. We've got Aneta Markowska, Jefferies chief financial economist. Aneta, it's good to talk to you today. You heard Jared sort of walking us through the price action in the markets today, but sort of saying that, look, maybe the latest data seems to show that things aren't as overheated as some were concerned about. You've said there's this standoff between the inflation bulls and bears. Where do you stand in that?
Well, I think it's, there's a good case to be made for why some of these inflationary pressures that we're seeing are transitory. I think as far as the sort of the medium-term inflation outlook is concerned, so sort of what happens beyond, the next 12 months, and that's going to be very much a function of the labor market and how quickly we sort of bring back those 7.6 million people who were working before the pandemic and who are not currently working. I am very constructive that we will see a meaningful acceleration in the pace of hiring, starting in June a little bit, but certainly even more so as we get into July and, once the unemployment benefits programs expire in the 25 states. And I think that ultimately, will put us in a pretty tight situation as far as the labor market's concerned by the spring of next year. And I think that, that's going to be a kind of a new source of inflationary pressures from, let's say, spring of 2022 onwards.
Yeah, there's a bit of a debate going on right now about kind of the impact of those states who opted to end unemployment benefits early. Missouri, along with a few others, kind of kicking us off there earlier back in June, doing so. And I wonder how much that's going to maybe put some more upward pressure here, or downward pressure, I should say, on wages as we move forward, if people are going to be coming off those benefits, and what it might look like in terms of the jobs number we're looking ahead to on Friday, as we see those changes, because a lot of people are debating whether or not it was needed to kind of lift those unemployment benefits early.
So I don't think we'll see much of an impact of that in the Friday's number, right? Because these are for June, and most of these programs actually didn't begin to expire until just after the survey week for June payrolls. I think we'll see that in July. But we when you look at continuing claims data, that's sort of your pool of unemployed workers by state, and how that's evolved since mid-May when some of these announcements started coming out. We have seen a clear differentiation in sort of the response. So if you look at the states where these programs are expiring in June, continuing claims are down about 14% in those states since mid-May. They're down about 10% in the July expiration states, and they're down about 5.5% everywhere else. So it does seem that as you move closer to these expiration dates, the downward momentum in the kind of pace of the shrinkage in the pool of unemployed, is accelerating. And what that tells us is that, as we get closer to these expiration dates and move through them, that I think, again, that downside momentum in continuing claims at a national level will accelerate. And that should translate to much stronger job numbers. So I think things are looking really good for July right now, where I think presumably you'll see certainly not all of these people come back, but even if 20% of them come back, that could easily put us, over 1 million in terms of July hiring. And they'll be coming back at a time, and this is also important, when seasonals actually expect a slowdown in the pace of hiring. So seasonal factors have been a drag on the pace of hiring in the last 2-3 months. And that starts to fade a little bit in June, but seasonals go into reverse in July. So, it's sort of like the perfect storm of having a lot of people come back at a time where seasonals don't actually anticipate. And I think that could result in a pretty outsized hiring number in July.
Aneta, what are you anticipating for the jobs number on Friday? I mean, it sounds like some of that downward momentum, as you described it, won't necessarily be reflected in these numbers that we get this week. How should we be taking it as they come in?
Yeah, so our forecast is 800,000 payrolls. We're a little bit above consensus, which is around 700,000. If our forecast is right, it would mark a roughly 240K improvement over May. So certainly looking for better numbers. And, we have seen certainly some improvement in whether it's continuing claims. They declined at the fastest pace last month since March. We are big fans of big data at Jefferies. So Kronos has done a good job kind of signaling the downside risks over the past 2 months. Their numbers for June were very strong. Again, the largest increase since March. And again, seasonals become a little bit less onerous in June. So all of that to us is adding up to, risks being skewed kind of modestly to the upside. But again, the big impact from the seasonals and from the expiration of these enhanced unemployment benefit programs, I think that's going to be a much bigger story for July.
Okay, well, I'll be watching that one closely. Aneta, it's good to get your insight today. And Aneta Markowska, Jefferies chief financial economist, joining us there.